So our speaker today is Andreas Kouparis. Andreas has over 30 years of international experience in information technology, with degrees in computer engineering and business systems analysis and design from the City University in London. He held a number of IT executive positions in Switzerland, Greece, and Cyprus. During the period between 1995 and 2002, he has founded, expanded, and finally sold 3 tech startups, including the first internet service provider in Cyprus. Following the sale of his third startup, he was recruited by Hewlett-Packard's startup subsidiary in Cyprus as its first managing director. He held this position until he resigned in February 2014. During his stay with HP, the local subsidiary grew to a 40 million company. In 2013, Andreas has founded CYBAN, the Cyprus Business Angels Network, of which he's currently the executive chairman. He has since been an active investor, mentor, and coach to a large number of businesses. Andreas is passionate about entrepreneurship, investing, and mentoring young teams of entrepreneurs. As a full-time angel investor, he frequently states that at this stage in his career, he can relieve the thrills of entrepreneurship by investing in and mentoring teams of entrepreneurs. Welcome, Andrea. The floor is yours.
Thank you very much, Maya. It's really great to be here, even if it's just a virtual presence. Would very much prefer to have been all of us together in a classroom. In any case, it's great to see so many people participating. It means that we are doing something right the last few weeks. I'm sure that there's a lot of people that have participated in our previous modules as well the last few weeks. Please allow me a couple of seconds to get my technology running. I need to share my screen. Just a second. Okay. Now, Naya, can you see the screen?
Yes, I can see your PowerPoint.
Okay. Just try and get this up here. Is that okay now? Can you see it in presentation mode?
Yes, it's now on full screen.
Okay, excellent. So please let me know if we should start or if we should wait for anybody else to join. Shall we start?
I think we can start. I'll be admitting people as you speak, if that's okay.
Okay. Well, as Naya said, my name is Andreas Kouparis. I'm the executive chairman of the Cyprus Business Angels Network, the first and currently still the only Business Angels Network operating in Cyprus. Please allow me to start by a short introduction of what this module is all about and what we expect to cover in the next hour or so. Let me start by the current situation where we all know that successful family businesses that have endured over time are the ones that really have put in place a robust legal structure and some sort of governance mechanisms. These have been covered and will be covered in other modules, but these structures and mechanisms that aimed at ensuring growth and continuity of family businesses can only be achieved if succeeding generations of owners continue to grow and expand the business. So stagnant businesses, not just family stagnant businesses, but any kind of non-growing business is eventually, at least in my experience, doomed not to do very well. So for the businesses to grow and increase their profit, usually they need strong financing. The recent economic climate, however, has had an impact on the ability of businesses, including family businesses, to finance their expansion projects through the traditional routes, which were the banking system and banking loans. So to fund this expansion, some family businesses have been willing to do something that, it was kind of not usual for family businesses, which is to willingly offer equity, part of their business, to strangers, to people outside the family. This is expected to be crucially important, I believe, post-COVID-19. So after the world's economy emerges from the results of this pandemic that we're all going through, family businesses that have survived or will have survived will need strong financing as well as strong practical advice that will ensure their recovery and growth for the sake of the business, of course, the family, but also the economy and the society as a whole. Now, the desire of any family business to maintain full control over their company, which is a normal desire to have for a family business, limits, however, their growth financing options. The two main sources of equity financing available to most businesses, not just family businesses, are one, the private equity venture capital funds, and two, the corporate strategic partners, who are usually a main customer or a main supplier of the family business that wants to expand its business vertically into this particular industry that they operate in. So there are, however, certain limitations that family businesses are faced with when they interact with these two types of investors. On the one hand, private equity funding often requires the entire business, the whole business, to be sold to maximize the value in the event of an exit, which means that in the event that the venture capital fund, the private equity fund, wishes to liquidate their investment into the business, their preferred means of exiting is by selling the whole business, or by forcing the sale of the whole business, which is the way through which the value is maximized. And on the other hand, the corporate strategic partners often see any investment into any vertical expansion into a business, including, again, family business, as part of a longer term plan to secure full control, to absorb the company into its own organization. So these are two characteristics that in my experience are not very desirable for family businesses who wish to maintain a long-term control of the business. Now, however, this family business owners' desire to retain sovereignty over their business opens the doors to an very underutilized group of investors called the business angels, many of which have family business experience as well as significant investment capital, or the capital required for the investment, and are willing to bridge the funding gap of family businesses to be used for their expansion. So Business angels are more willing to invest in exchange of a minority stake in the family business, so maintaining the family owner's majority control, which is a very desirable characteristic for the family businesses. And they don't only provide a source of funding, which is extremely important, but they can also provide insights and knowledge that are extremely beneficial to businesses and family businesses, of course. This characteristic of investing much more than money is inherent, and it comes natural to business angels because business angels have so far and mainly been investing in very early stage companies, startups, as they are known. The buzzword that is used for them recently, and whenever you deal with a startup, with a company at a very early stage, you need to really invest much more than just money. You need to invest your time, a hell of a lot of time. You need to invest your network of contacts in the market. So you almost become a co-founder to the teams to the founding teams of the businesses. So that inherent characteristic is transferred also in investments that they make in later stage companies, more mature companies, which are in their growth stage. So recent surveys have shown that business angels and family businesses are a very good match for each other, and the experience can be overwhelmingly positive for both sides. Business angels are appreciated as investors by family businesses as they are patient investors that take a long-term view and are not focused on a rapid exit. So willingly giving chances for the businesses to perform by being patient. However, an appropriate arrangement for the exit stage of the relationship, because unfortunately it's a relationship that will end in an exit for the business angels. This is what business angels do. This exit route, this exit strategy needs to be well structured from the beginning, from the outset of the relationship. So the main objectives of the module are to help family businesses understand the value of business angels as investors, to help family businesses find ways of advertising their funding needs, to connect find ways to connect to appropriate business angels, and also to formulate exit strategies for their business angels investors. So in order to get it right, and this is extremely important for this module, and of course for practical situations, there is a real need for due diligence pre-investment phase. This would protect both sides during the relationship, during the duration of the relationship. And this is exactly what this module aims to prepare the family businesses for. It is extremely important and we will see this later on, how to perform this due diligence pre-investment phase for both sides. Now, finally, the present module makes a significant assumption that the family businesses wish to maintain control of the business within the family in the long run, and that the majority of the family members who are shareholders do not wish to exit by selling their share in the family business. So this is the assumption that we have made in drafting up this this training module. At this stage, Naya, is it possible to run a small poll
Yes.
to see what people have experienced so far in that respect? So
Yep.
do you want me to stop sharing, or can you do it?
I've just launched it, so I think
Yes.
we're good.
Okay, great. So I would really appreciate it if we, this is just a general question to see if any of the participants, especially the business owner participants, have tried to raise capital for expansion, though, not just operational capital, but to fund expansion plans that they had, say, the last 5 years, even if it's a bit longer than that, that is okay. So you can choose up to 2 answers, please, just to see if somebody has. And please, while you're doing this, please, I'd just like to tell you that feel free to raise your hand at any time, so that you can interrupt me and ask any questions. Tell me if I'm too slow or too fast. Let me check chance. Okay. So how are we doing, Naya?
I can see that 23 out of 44 people have voted. We can give them another 20 seconds.
Sure.
Andrea, I see that chat as well, and some people are saying
Yes.
that, okay, they see the black box.
I have 2 black boxes in the middle of the presentation slides. Okay, so some people are not able to vote, as I can see, Naya.
Are they not able to vote, or?
Unable to submit.
Oh.
So same problem. So there's same problem. I have 2 black boxes in the middle of the presentation slide.
I think you could stop sharing and share again.
Let me stop sharing. So I've stopped sharing now. Let's hope that this works now. Yes, I can see Rania's point that I need to share the PowerPoint, not the screen. The problem, Rania, is that I'm running a couple of videos from within the presentation, and it doesn't work if I just share the PowerPoint, but yeah, maybe without sharing the presentation would be better now.
I think try sharing your screen again, because it looked fine when we tested it before.
Yeah, but maybe it doesn't work with the polls. That's what.
You see the polls? I will end it now so we can discuss it.
Yeah, can we see the results?
Yes. Can you see the results now?
Yes, I can.
Great.
So, as expected, the majority has either tried or successfully secured a bank loan, at least from those who have tried to raise, the about 70% that have tried to raise some sort of capital. More than 50% have applied to the banks, and only a very small amount has managed to successfully raise the equity capital, which is, again, to be honest, as expected. And I would expect that none of you guys, or if any of you guys has had any experience with a business angel investment, or was it venture capital? Can I ask the 8%? I don't know how many are the 8%, maybe one or two that have raised.
If I can speak.
Yes, please.
So we had raised our equity capital by former results from previous years.
Okay.
It was like in a reserve space, and then we turn it as an equity capital.
So, but was it from external investors?
No. It was from our profits.
Family.
Profits of the business. I'm sorry, my sons are here with YouTube and.
Okay, I understand.
It's too noisy.
It's okay. So I understand that you have retained profits and used your retained profits to fund your expansion, but you have not engaged external third-party investors.
No, not this time. No.
Okay. So it's probably then 0% that have managed to raise the external equity capital, which is very interesting. I didn't expect anything different from that, to be honest. It's a very new thing, and that proves a little bit what I was saying before, that family businesses are not so willing to, and we have been experiencing that, not so willing to give up part of the equity of the business to outsiders, non-family members, and that is one of the main reasons that we see that happening. I can see that there's at least a couple of answers that say that they have tried to raise equity capital through external investors, but the deal did not go through. If it's possible to have a comment on that from anyone who has had that experience, that would be, again, a very interesting comment to hear. Is there anybody who wants to share with us this kind of experience? No, that's okay. I cannot see if there are any hands raised. Naya,
I don't see any hands now.
Okay. So there is a second poll that I would like to run. I'll just close this one. Can we run the poll number 2, please? Which is the plans of, if there are any plans from the participating companies here to actually raise, they foresee a need for expansion capital. This is just a yes/no question.
Yeah, it should be on the screen now.
Just give a few minutes. Mm-hmm.
Andrea, we also have a comment in the chat if you want to address
Yes,
it.
I will read the comment from Tonia. It says, I believe this happens for 2 reasons. Firstly, business angels are not so famous, so few people know how to start. And secondly, I believe it's about trust, which relates to the point you mentioned regarding family businesses. I totally agree with you, Tonia. We have, we're very well known in the startup world and in the early stage businesses that we are their preferred means of financing, because there's no way they can get a bank loan at that early stage in their journey, and very difficult to get any funding from venture capital firms who are, require much more structured deals. So we are the preferred option, and perhaps the only option for these younger businesses. I have another comment from Melinda saying that I believe also that the outside investors do not wish to keep and maintain the declared values of the companies from the family businesses. Yes, you're absolutely right. We will cover this later on today on how to best select a good match for both sides. And this is extremely important. Okay, so yes, there is an overwhelming majority that foresee an expansion capital need in the next few years. So yes, this module becomes quite relevant then. Let me share my screen again so that I can continue. I will share the screen again so that everything can run smoothly. So Naya, can you see the slides?
I see only, I think it looks okay now. I don't see any black boxes. I don't know about the rest of the attendees.
Now, so now you can see the.
Daniel says it's okay.
Okay, so let me continue by giving you a case study that we've selected to present to you. We have selected a case study from the UK that demonstrates some important aspects of the family business and business angels partnership. So we've selected a manufacturing family business based in Yorkshire and Hampshire region in the UK, who had external business angel investors in addition to the 3 family member investors that invested in the company. So as stated by one of the family members, that initially wasn't part of the plan, but the banks refused to lend enough to the business. So they had to urgently decide and find suitable external investors. One of the conditions they put forward was to buy the investors out within 3 to 5 years. That was agreed as the exit route for the investors. Details of the exit, the financial details of the exit, such as the share price calculation, etc., were not disclosed to us. But there was initially a high level of resistance within the family to external investors, as of course I said before, it was expected. But eventually the business owners felt that they had little alternative. So they knocked on a few doors, the banks, and they couldn't secure the loans for many different reasons that again were not disclosed. So this example serves to highlight the magnitude of such a decision in the eyes of the owners, and the care with which it needs to be considered, and of course the importance of the rationale underlying the decision. Now, one other aspect that eventually made the business angels option an attractive one for the business was that the business owners accepted that they did not possess all the skills or they didn't have the capacity required for implementing the growth plan as it was designed. However, in this particular case, the decision was taken as a last resort decision, and there was little time to provide or to give the necessary consideration for the role of the investors before the investment was concluded. So no time to plan, because the owners have, in essence, found the relationship. I mean, that's the reason, sorry, why the owners found the relationship occasionally very tense and frequently had to put out fires and deal with these stressful situations between the family members and the investors.
Andrea,
Yes?
I'm sorry to interrupt you, but one of the black boxes is back again. And also there was a comment in the chat which says, I think it is necessary to accept to share the responsibility and be ready to be challenged by people outside the family.
Yes. Okay. I don't think I can do much about the black boxes. But yes, I totally agree with the comment. Do you want me to exit, to stop sharing and start sharing again?
Yes, and maybe share the PowerPoint as Rania suggested. Maybe that would fix the problem.
Okay, I'll do that. And then when we need to show the videos, I apologize about that.
Yeah,
Let me
exactly.
stop sharing and share just the PowerPoint. Can you see the PowerPoint presentation now?
Yes. Oh,
okay, so.
I see a black box again though. I hope it goes away. No, it's there.
Is it here? Is it there?
Yes, on the side, on the right side.
Okay. Let me just see if I can close. Any progress? No?
Yeah, it moved up to the top. It's not blocking any
I know
of
what
the...
I know what it is. Let me just...
I think it keeps coming back.
Is it?
Now it's gone.
Is it gone now?
Yes, I don't see it.
Okay. I apologize about this. So, yeah, yes. So, yeah, I think that there's a number of governance lessons that can be drawn from this very brief description of the case study. First of all, the family business requires a clear strategy as a vital context within which to decide that funding and how much of it is actually required for how long and for implementing which parts of the growth strategy. It is also obvious that the business must take a conscious decision to look for suitable business angels to partner with, so that it has adequate time to prepare and plan for it through a due diligence pre-investment phase, which I will go through in the next few slides. It is definitely unwise to wait until this becomes the last alternative. So after the search of funding through other sources, to have as a last resort the business angels, because then you're looking for last resort funding with, you know, the back against the wall essentially, and perhaps not enough time to plan the plan the deal out. So finally, to avoid tensions once the partnership with the business angel is signed, the consideration of the role of the investor needs to be well thought out and drafted before the investment is concluded. So this is extremely important, that everything has to be planned well in advance before any agreement is concluded or signed. Again, as part of this due diligence pre-investment phase. So these pre-decisions need to include the very important issue of conflict and disagreement resolutions within the business decision-making bodies, such as, for example, the board of directors. Now,
you
we
have a
seen,
question, Andrea?
Let me see. Yes. Where's the okay? Let me just read the question.
Shall I read it to you?
So, I can see it. What is the
Okay.
maximum amount of money that the angel funds are investing? Do they have a ceiling? Yes, but it really depends on the country and the business angels. So it's yes and no. In Cyprus, for example, I can tell you from experience that business angels, we have invested in it's 14 now businesses since our founding in 2014. So we have invested in 14 companies. The maximum that we invested was $1 million. The total maximum that was invested in a single company, and that took 9 investors to raise the 1 million. I know of other business angels in other countries that alone as individuals have raised over 2 million. So the question really has a yes and no answer or has a yes answer, but it really depends on which country you are trying to raise capital from. So yeah, there's no one answer to that question. Now, let me just try and explain who, because as we've seen in one of the comments before, business angels are not so well known or are not famous as a comment was stating. So we have seen in the introduction that business angels, that the two external, the most common external sources of business growth investment finance are the private equity and the corporate strategic partners, but they both fall short of family businesses' funding expectations or relationship expectations. So a number of family businesses started looking in the direction of business angels for their growth funding needs. And I said before that it's a natural and sometimes very positive relationship because of the nature of informal investment decisions and business involvement of business angels, which in many cases suits the informal ways that families operate outside, of course, the business. Let me try and make that a little bit clear by just saying who business angels are. So a business angel is essentially an independent individual who provides capital, like I said before, networking, experience, and mentoring for the development of a business. Typically, a business angel is a wealthy individual who invests his or her own money in unlisted and potentially high growth companies to which they have no family ties. So this is the broader definition of the business angels. And even though they usually invest in very early stage businesses or startups, and this is how business angels came to exist. some business angels are also attracted, by well-managed and well-run family businesses in the growth or scale-up phases of their cycle. Sorry, just check the chat again. How are these businesses doing now? Could you describe the best and worst of your cases? Yes. Can I leave that for later on, though? Let me just explain who the business angels are, and then I'll come to some of the cases that we've been involved with. Okay, so business angels usually expect to have a direct, hands-on approach to the investment, which in some cases, some family businesses may find intrusive, but which can in fact be a tremendous help, especially in the growth stages of a business. As well as extensive personal experience, a business angel will often provide access to a strong network of business contacts. And there are also some wider factors that affect this relationship with business angels, such as the personal chemistry between the business owners, the business management, and the business angels. And of course, something that was commented on before, it's very important to see if there are any shared values and visions between the two sides. Otherwise, there will be conflicts later on in the relationship. So a very thorough and detailed and open-hearted discussion needs to take place before any such investment is concluded. These are all very critical in selecting the business angel that you want to work with, and also for the business angel to select the family business that he wants to or she wants to invest in. Now, business angels normally expect to realize their investment in around 4 to 7 years. So this is a typical time frame for an investor, for a business angel exit time frame. And usually this is done by means of a sale to family members, so selling the share back to family members, or to a mutually approved third party. We will see this later on in the module. And there may also be less pressure to provide a return on this form of investment within this time frame, but this needs to be agreed before the investment transaction is completed. Business angels, like I said before, are appreciated as investors by family businesses, as they are patient investors that take a relatively long-term view when it comes to a well-run family business, and are not focused on a rapid exit strategy. So no real pressure on the family business owners. So they're willingly giving chances to the business to actually perform. Now, business angels are also more willing to invest in exchange of minority stake in the company, maintaining what the desired family owners' majority control. And business angels do not only make, like I said before, a financial investment, but also an emotional one as well. They expect a deep involvement with the members of the family as part of what I would call an emotionally driven relationship. So this is very, very important for the business angel. And they really need to feel, and this is again very important, as part of the family, and need to be treated as part of the family, which I understand it's not easy, but it's something that helps both sides, and it's really important to get this right at the outset. Let me just check one more comment that we have. Yes, I will come to the return on investment in a second. Okay, there is a question about the expected return on investment. But before I do that, there is a couple of short videos that I'd like to show you, just to get a feeling of who business angels are. Let me just, now I need to share again, share back the, stop sharing this. And share my screen again. So that we can. Okay, so just, oops, sorry, just show you a small video. This is a video that was produced a few years ago by the European Business Angels Network. Naya, can you see the screen, right? Now that I'm sharing, I just need to check.
Yes, I see the PowerPoint.
Okay, let's see if we can see the video now.
There are 7 things you think you know about business angels.
I can hear
1.
the sound too.
Business angels only invest within their own region. Incorrect. They look for the best teams and ideas no matter where they come from. Yes, in our sector we already play in the single market. Well, someone has to. 2. There are only a few business angels in Europe. Wrong. Today, Europe has nearly 260,000 angel investors, and the number is rapidly growing. If you still think it's a small group, invite them to dinner and pay the bill. 3. Angel investors are all old businessmen, disconnected from recent business trends. Misconception. A new young angels generation is on the rise. One day, baby, they'll be old, but not today. 4. Business angels are only successful in the US, where they funded Google and Facebook and Skype and Rovio and, I beg your pardon, these were actually businesses initially funded by European investors. How about that? 5. Business angel investment in early stages is limited compared to venture capital. I see. And where did you get that from? In 2012, VC funds invested 1.9 billion euros in early-stage companies, while business angels invested 5.1 billion euros. You got that, huh? 6. Business angels are lone wolves determined to take full control of startups. I guess so they'd be more like business devils than angels, wouldn't they? I suppose they do have a wolf-like habit to invest in packs. It's like having a friend who knows people who know people who know people who know even more people. 7. Business angels mean money. I see your point. No, I don't. Money isn't everything. The truth is, the money they provide comes along with equally valuable mentoring and network. You know what they say, give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime. So, are we clear now? Well, let's see. Time for a quiz. Which countries have the best business angel tax incentives? UK and Turkey. Which country has the most advanced policy supporting angel networks? Spain. Which country has the most advanced knowledge and practice in angel syndication? Ireland. What are the top 2 countries in Europe concerning the visible angel investment market size? UK and Spain. Which countries have the best business angel co-investment funds? Portugal and Netherlands. Which country has on average the most developed and active business angel networks? Finland. Now you actually know. Let's fund the future.
Great. I hope that makes things a little bit clearer. Let me just go back to the presentation. I have one more short video that I'd like to show you, just to get a feel of, how business angels think. This is a lady, a successful business angel that was interviewed by EBAN, the European Business Angels Network, and it will just give you an idea and a feel of how business angels operate. So. Naya, can you still hear it and see it?
Yes, sounds
Okay.
just fine.
Great.
So I'm Brigitte Baumann, and I'm delighted to share with you a little bit about my angel investing journey. So like many individuals, it started when some friends came to me and said, listen, I'm going to be an entrepreneur and do you want to support me? So in 2003, when I actually discovered what angel investing was and I decided to actually learn and do it properly, I started joining some angel networks because I found that that's the best way to get going. In 2006, I really started investing with others. And I would say that in 2009, that's when I started seeing that really to be an angel, it's all about building, managing, and exiting a full portfolio of investments. And that's when not only did I start managing my portfolio much more seriously, but I also started a company called Go Beyond Investing, which is all about helping people both learn while they're building their portfolio of investments. So how did I become European Angel of the Year in 2015? Basically, it really was after about 10 years of angel investing. I had built a portfolio that was starting to have regular exits, so I could really demonstrate, one, that I was able to get returns with angel investing. Two, I also had shown that I've been able to not only build a portfolio for myself, but be a lead investor for other investors with whom I invest with. And third, what is very important when you become European Angel of the Year is that I dedicate part of my time to give back and to help others who are brand new angel investors to learn about it, and also to help the whole European angel investing ecosystem. It's really the passion of my life. I've been doing it for now 15 years, and I know this is what I will continue to do for many years. And at the same time, it's enabled me to find kind of my mission in life. And so my mission in angel investing is really about democratizing while professionalizing angel investing, and to show that angel investing, you can do well at the same time of doing good, investing with your values. So if I see that an entrepreneur might not know a lot about the terms that we're going to be putting in the shareholder agreement, instead of kind of saying, oh, great, maybe that means I can put in a couple of terms that will be very beneficial for me as an investor. Well, actually, my first instinct is saying, well, if you don't know, here's a video maybe you can watch, or here's a webinar you can maybe participate in. So you get to understand why we're putting in some clauses and how it is working for angel investors to make sure that the entrepreneur is quite clear of what it will mean to bring angel investors. In terms of women, I invest with a lot of men. I really enjoy investing with men, but I also have created and initiated with some other women, some women-only learning and angel investing programs. We really like to bounce off ideas and to often pool our money together so that together we feel, okay, we're a community, and we can make some joint decisions. One reason of why I'm so passionate and I dedicate a lot of my time to enable more women to learn about angel investing, and if they decide it is for them, to accompany them, is because that I find that it brings so much richness to the entrepreneurs. By having a lot more women investors, one is we're enabling the entrepreneurs to have access to broader set of perspectives and skills. And also we have usually a lot more diverse entrepreneurs who get funded, including much more women entrepreneurs. And the statistics show that women entrepreneurs on average have a lot harder time raising financing from angels or other forms of financing than men entrepreneurs.
Okay. Let me just stop sharing now and just share again just the application.
And I also think, Andrea, you have a new question in the chat.
Yes, yes. Let me just check. Okay. I don't see the questions, Naya.
It says, could you clarify how give the BA to realize tech investment?
Sorry, can you repeat that, please?
I'm not sure if you've covered this one. Could you clarify how to give the BA to realize tech investment?
How to give?
Yeah, if
I'm not sure I understand the question. Sorry.
can the person maybe clarify? Maybe we come back.
Yeah.
We come back to it later.
Okay. So now you can see my.
Hello. Can you hear me?
Yes. Yes.
It's my question. So the question is, how do you have said that the business angel wants to realize the investment in 5 years. So after 5 years, how do you think it's possible to give the possibility to the business angel to realize this investment? You see what I mean?
Yes. Yes. Okay. I understand. So what you're saying is, how do you to draft and execute an exit strategy for the business angels? Yeah, this is something that really needs to be drafted well. It's one of the most important things that needs to be drafted before you enter into a relationship with any investor, but especially with a business angel investor. There are many ways of doing this. One way.
What I wanted to say, if you accept to open the capital to the investors, if you want to buy back to buy this if the business angel wants to sell, how do you pay this? You see?
Yes, there's two ways of doing this. One is to sell the equity to the existing shareholders, the members of the family. So either pro rata or pre-agreed portions to allocate the equity to a pre-agreed proportion to family members, but each family member will need to pay and buy his or her own share from the investor. The other way is to issue a special kind of redeemable shares in the company, so that the company the shares can be redeemed back or bought back, absorbed back by the company itself. So that's the other way of doing it. And there, the company either has to have enough cash reserves to do so, or they need to be in a position to issue a different kind of capital, either to the members of the family, or as a last resort, get a loan from a bank if the situation has changed and this is easier to do. to buy back the investors. So there are a number of ways of doing it.
Okay.
Another way that I have personally experienced, it wasn't a family business, it was a business though that I exited from. We found a third-party investor that was more involved in the sector than I was, and we pre-agreed with the existing shareholders to sell my share to this new external investor who had more ability at this stage of growth of the company to help the company move forward. So there are a number of options that you can utilize.
Okay, thank you. Thank you.
Okay. So let me go back to sharing the PowerPoint. Can you see it now, Naya?
Yes, it looks okay.
Okay. So in this slide, we have tabulated the rules and characteristics for each side of a successful family business and business angels partnership. So to ensure that the partnership is a successful one, the family business needs to have the following in place before, as you can see on the left-hand side, before the partnership is concluded. So a clear and documented business strategy and family business values, documentation, including the clearly acknowledged need for external help with strategic issues and need for capital, as well as willingness to give equity to outsiders in return. So this needs to be very clearly documented and agreed by all the stakeholders within the family business. The family business must be in a growth stage and is clearly willing to accept business angels as a member of the board of directors. So this is again a very important issue, and this is many times a requirement from the third-party investors. And be prepared, and this is again a difficult decision but an important one, to treat them as part of the family. You have seen before, in that lady that was being interviewed, that you will be adding a very passionate member into the business who needs to be treated really as a family member. I know this is sometimes very, very difficult to do, but in many cases, if the right investor, if the right individual or individuals are identified, this special treatment or equal treatment of these individuals can be of a tremendous value to the business. So again, on the other side, from the business angels perspective, the following, as you can see, characteristics are essential for this for the success of this relationship with the family business. So the business angel needs to have a long-term investment horizon, accepts to maintain low levels of interference. So adds his passion and his contribution when he or she is asked to do so. Has relevant sector experience and network, and ideally, that's a big plus, has family business experience himself or herself. Now, it is useful to know what your potential investors or your future investors expect out of their investment in your business. Business angels generally, I would say, expect the following list that I'm going to show you from their investment in a family business. So an investment horizon, like I said before, from investment to exit. That's what I call the horizon, about 4 to 7 years. Under certain conditions, for example, if there is an agreement for high dividend policy, if the profits allow it, of course, then this may be extended to further than this horizon. An average, and that was a question before, an average return, compound annual return on investment of 30%. This is the expectation, which translates roughly to about 3 to 6 times their investment in the time frame that we're talking about. I can see some comments. Sorry, let me just go in the chat.
Yes, sorry, Andrea. You have one from Miguel and one from Elena.
Let me try and answer. So businesses are always related to first stages of companies. What about family companies with a long history in a growth project? Yes, like I said at the beginning, the classical investment criterion for a business angel is early stage, and that's how the name business angel came about from the crisis in the 1930s, where these wealthy individuals have helped specific sectors, especially in the US, to get off the ground by investing in these ruined businesses or new businesses that were being formed following that crisis. So yes, by definition, business angels, and this is what we do, invest in very early stage companies. But having said that, the last, I would say, not more than 2 to 3 years, but this is especially true the last 1 year, we have seen a number of family businesses knocking at our door because they have little other alternative for funding. And on the other side, we have seen some of our members, some of the business angels, actually looking for well-run family businesses, and irrespective of the growth stage they're in, because they feel that the informal or the family climate in some family businesses suits their informal way of investing. So unexpectedly, we have seen some matches between business angels and family businesses that we didn't see 3 or 5 years ago, that lead to successful partnerships because of the matching of the requirements, the informality of the transaction, informality, of course, compared to a venture capital or a bank loan transaction. So the more emotional aspect of investing, that was brought the two sides together recently out of necessity, but also proven that it's a good match, and a successful match in many cases. So I hope that answers the first comment. And the comment by Elena: is there a limitation on the kind of business angels would invest on? For example, on a specific field of agriculture. Like I said before, the ideal situation is to find a business angel that has relevant background experience as the field in which your company operates. Yes, I agree that the strict definition of a startup is a technology company, and the strict definition of a business angel is an individual, a wealthy individual that invests in a technology company with very high and explosive international growth potential. This is the strict book definition. In practice, we have seen many things changing the last few years. We have seen business angels investing in agricultural products. We have seen business angels investing in F&B, in food and beverage industry. So it really depends on the individual investor that you find, but there are business angels in every aspect of the economy, and you know, any industry you can imagine nowadays. So if you find a good match, you know, grab it and you know, try and build that relationship to last by doing. I will go through now in the next couple of slides the pre-feasibility, the pre analysis that needs to be done and the agreements that need to be put in place before such a relationship is executed. Okay, so going back to the slide. So, like I said, as a rule of thumb, now the expected profitability from the side of the investor is aligned to the compound annual return on investment. So that about 30% year-on-year growth in profitability. And one of the most important issues, like I said before, in sealing such an agreement is the pre-agreed exit strategy. That is when, how, and also to who the business angel will sell his or her share of the family business. It's an extremely important issue that needs to be clarified. Now, like I said before, the usual exit routes when investing in what you know, they usually invest in, which is the startups, are to sell a business to a competitor, plan an IPO, or sell part of the company to a venture capital firm. This is the usual exit strategies when a business angel invests in a startup. It is, however, a very different story when it comes to family businesses. As like I said before, most family businesses opt to maintain control of the business long after the business angels are gone. So the business angel exit route needs to accommodate this this fact. So therefore, the exit route options for investing in a business, a family business, are quite different. I mentioned redeemable shares. These are shares bought back or redeemed by the company itself. In this case, a special class of shares, the redeemable shares are issued and allocated to the business angels, which can be acquired back by the company at a value which is calculated on and this is again very important, a pre-agreed formula. So usually based on the valuation of the company at the time of the exit, but the formula for the calculation of this value needs to be pre-agreed. So funding of the exit, in this case, comes either from external sources such as banks, like I said before, or from retained profits, or a combination of the two. So these are the redeemable shares. Let me check the comments again. Equity injection happens in 1% of smaller companies, according to UK statistics. Are family-based angel investment a good idea? Easy, but comprised. Sorry, I see this is coming from Panicos. Equity injection happens in 1% of smaller companies. Okay, so that is a compromise. Okay. Okay, so that is a comment, Panicos. Thank you. I would say that, you know, equity investment in many parts of Europe, if not the world, is very small today. But you know, I think this is a growing area for both businesses and investors, as there are fewer and fewer options to raise capital, especially to fund growth plans. And the question also that are family-based angel investment a good idea? Easy but compromised. I wouldn't say it's easy, Panicos. I would say that a lot of work needs to be done for you know, a successful match between a family business and an angel investor. I don't think, you know, we should view this as a compromise rather than a win-win situation for both sides. At least, you know, the successful investments are win-win situations. Of course, there are failures as well, like in all walks of life. But you know, to get it right, a lot of work needs to be done before the investment takes place, and this is what I want to explain in the next few slides. So very quickly, just go to the next. Yeah. So business angels shares. This is another option for exiting. Are sold to family member shareholders, either on a pro rata basis or based on a pre-agreed proportion. In this case, funding for the exit is provided individually by the family members who agreed to buy the business angels shares, again on a pre-agreed formula that needs to be agreed from the beginning, and do the valuation using that formula at the time of the exit. And finally, I mentioned a third option, which is basically to sell the shares of the business angels to a mutually agreed third party. So we wait until the end, and then, you know, we find a third party that is more suitable to be a partner of the business at this later stage, or at the stage where the business angel is required to exit. And of course, any combination of these methods can be used. So like I said, the value of needs to be pre-agreed. And the formula that determines the value needs to be pre-agreed. Now, it's obvious that a lot of preparatory work needs to be performed by the family business in order to understand the characteristics of the investors they need. They need to ensure that both parties are signing up to the same endeavor, to the same journey, and that they both know what is expected of each other and how differences will be moderated. It's very important to get this right, otherwise it's going to be a very, very difficult situation. We have developed in this module a set of 3 precursory due diligence checklists, and these are very important. If you get something out of this module, this should be the 3 lists that need to be prepared before any such investment takes place. So the first of the checklist is the investment opportunity executive summary, which is about one page in length, and contains a description of the business, which should include basic information such as company size, turnover, profits, target market, industry trends, about 5 to 10 lines, very brief, so that you know, it captures the business in about 10 lines. Then the value proposition which is what differentiates essentially the company from competition. very brief again, 3 to 5 lines. A list of the most important values that make up the DNA of the family business, about 3 to 5 lines again. And this is one of the most difficult ones to write, to define the values of your DNA as a business in capture it in a few lines. A description of the basis of the planned growth. So whether it's market penetration, product development, market expansion, market diversification, you need to identify what your growth strategy is, and which is essentially describing what exactly it is you want to fund. Again, 5 to 10 lines. It really needs to be very much to the point. And finally, this first checklist needs to contain an analysis of funds required, so how much you need, and how this would be utilized to fuel this growth strategy. So essentially, how much and for what? Again, 5 to 10 lines, a total of about 1 page. Check if we have.
Yes, you have one question from Karina.
Let me check it. Okay, do you know if a business angel exists in the Middle East? Yes, there are many business angels networks in various countries of the Middle East. I will give you some information in the end about all the business angels and how we can identify business angels. Okay, so the second, I'm sorry. Yeah, so the second checklist is the investor description checklist. This essentially includes an indication of whether the family business prefers, for example, one business angel or a syndicate of business angels. Usually one external investor is easier to manage. However, a syndicate may bring multiple levels of expertise to the business. A prioritized list of the following business angels characteristics. This is important to get right. So you need to prioritize these items that I'm showing you. So the long-term investment horizon, whether the business angel accepts to maintain low levels of interference to the business, whether the business angel has a relevant sector experience and network, whether the family has, whether the business angel has family business experience, has growth management experience, and the list should continue with a 3 to 5 line description of the reasons for needing business angels as external investors. Is it cash, or is it much more than cash? So you really need to be able to prioritize these characteristics in a sequence, in a priority sequence, and then state and put it in writing. And it's always very difficult to put it in writing, and that's why it's very important to write down and actually circulate this within the family members, within the family owners. Why do we need an external investor? Is it just money, or is it much more than money? And then finally, we need to document ways to maximize value of business angel through the description of the role of the business angel within the business. I have another question, I think.
No
Okay.
new questions. I'll let you know.
It was a thank you. Okay. Can we run another poll now? I'll just stop sharing so we don't have the same problems as before. It's the poll number 3.
Sure.
I was hoping that we could have this module was prepared for a classroom face-to-face training, but instead of writing down and completing this checklist in teams, we just need to give some indication of how you would prioritize, and by indicating what you consider to be the two most important characteristics in a potential business angel investor from what you've heard today. If you just indicate two answers, please, just to have a feel of, from what you've heard today, what you would consider as important characteristics of a business angel. I'll leave you a few. It says that only one. Okay, just one answer then.
Are you sure? I can change it if you like.
It would give a better indication, I think, if we can do it for two.
Okay, just give him
Thank you, Naya.
half a minute.
Half a minute break. It's good we don't have any interferences in today's module like you experienced in last week's session. Yeah, I couldn't participate last week, but I've heard that it was quite a strange situation to be in.
Yeah, it was.
I can imagine.
I'm also glad we're not having any occurrences like that today.
Yeah.
I'm sorry, this is taking longer. Shall I relaunch this one?
If it's 1 more minute.
Okay.
Yes, Celia, I can imagine it was terrible. Yes, Melinda, you're very welcome. Thank you for your kind words. I will send my email to anyone who wants to contact me. And of course, I have a next slide that would have been a classroom exercise where I would ask the participants to complete as much as possible of these three lists, of these checklists. And if any participant would like to complete these and send them to me for review, I will be very, very happy to review them and give you a reply on what I think on all three checklists. So I will give my email at the end, but I'm sure that Celia and Naya can communicate my email to all the participants.
Yes, for sure.
Okay, so please 2 answers now so that we can get a feel. You're very welcome. Okay, Naya?
In 1 minute, 22 out of 51 have voted.
Okay.
The people are still voting, so maybe we should wait a bit.
I don't mind waiting.
Okay, I'm going to end the poll now
Mhm.
and share the results.
Okay. So it's a good blend, I would say. I like the fact that, you know, the second one accepts to maintain low levels of interference is not that critical to a lot of you. I would a little bit disagree and say that family business experience is a big plus, because, you know, people tend to know how to treat the other members of the family. But yeah, it's as expected, I would say, a blend of everything, because they're all important. It's just different priorities for different people. And it's always nice to be able to identify the ones that are very relevant to you, your business, and your family, because that will be reflected in a similar exercise that the investor will do when they try to assess whether you're a good match. They will do something similar. So when you exchange cards and you exchange priorities, then these things will come up, and you know, they better match at the beginning rather than, you know, identify later on that these are not a good match, or are not agreed and solved at the beginning. So I will close this now and try and share again. Share my PowerPoint. Can you see it now?
Yes, just fine.
Okay, perfect. So moving on to the next slide, which is also very important. Once the investors are selected and the investment transaction takes place, business angels should be treated, and this is again extremely important, I cannot stress it enough, as part of the family. This is what they expect, and this is why they would rather invest in a family business. I'm talking about always business angels, and not in any other kind of business, as long as it's not a startup, of course, because of their need, if you like, to be treated and to feel as part of the family. It may prove very beneficial to invite those precious partners to key family activities, taking them on as a quasi members of the family. The investors in key family activities checklist, as I call it, will help a lot towards this. So it should contain a list of official family business bodies and fora, for example, the board of directors, the general assembly, and whatever other family business bodies you have within the family business. And also, very importantly, is to have a list of unofficial key family activities, and try and list all these kinds of activities, including, for example, regular gatherings, meals, parties. I'm not talking about, you know, closed family, whether one member of the family with his or her spouse has, you know, the birthdays of their children, etc. But think of family gatherings where the whole family as members and owners of the business gather unofficially. So think about those kinds of events and list them. You know, a description on how the family can achieve treating the investors as quasi members of the family indicating, for example, which official and unofficial family bodies from the ones you've listed above and the associated activities, the business angel will be invited to participate in. So state that in about 5 to 10 lines again. So that essentially concludes the third checklist that needs to be in place in order to allow a better understanding of what you're looking for, who you're looking for, how you're going to treat them once they're on board. And these checklists need to be reviewed and agreed by all the family members, all the stakeholders that participate in the family business. Finally, this would have been an exercise that if we were fortunate enough to meet in person in a classroom, I would normally give out to complete. So you can do this, like I said before, in your spare time, whenever if you would like to try and run this by your family businesses. And I will be very happy. My email is shown at the title of the exercise. I'll be very happy to review any such document you send me and send you back my comments. Just to answer a question, a final question that we had in the chat, the EBAN site, the European Business Angels Network site, it's eban.org, as simple as that, eban.org, is a very good starting point to identify business angels networks in your country or in your region that would potentially have investors interested in a family business, or in particular your family business. I can also get you in touch if you contact me with the business angel network in your country, whether it's in Europe or the Middle East, because the European Business Angel Network, EBAN, has recently associated with the Middle East Business Angels Network, which is the Business Angels Association of Business Angel Networks in the Middle East, and also the African Business Angels Network Association. So these three associations are affiliated under the EBAN umbrella. So feel free to contact me, and I will give you, I will bring you in touch with the appropriate networks in your country if you wish to do so. So it's very important to note in conclusion that there is a natural interest. Sorry, I have comments before I go to the conclusions. Let me just go through the chats. Okay, you're very welcome. Thank you for your kind words. I'll go back and show you my email again, but this can be sent out, right, Naya, to all the participants?
Yes, if you like, I can also write your email in the chat or send it via email.
Yes, it's shown in this slide, but you can do both. So yes, please feel free to contact me. So again, in conclusion, I would say that there is a natural interest by business angels to invest in family businesses. And I say natural interest because of the family environment and the family warmth, if you like, that business angels in their informal way of investing are expecting to see from a family business. Their long-term investment horizon, their commitment to strong values and legacy, their, I would say, our deeply personal relationships, etc., are very attractive to business angels. So to help make that relationship last, one has to recognize that the emotional rewards need to be earned as regularly as the dividend checks. This is extremely important. You you can skip a couple of dividend checks if they're justified, but you shouldn't be skipping the emotional rewards that you offer to your angel investor. The hard work, I would say, starts after the investment has been completed. This is when one needs to go beyond the passive alignment of values into an active governance and relationship participation. Very, very important to bear that in mind. The secret of a lasting relationship of this kind is, not surprisingly, an active management of the elements that made it flourish in the first place. So again, a very important statement. For example, combining solid emotional benefits with best practice governance. I know it all sounds very difficult and very theoretical, but if you think about it, it's really important to match the two and to align the two. The burden of managing that relationship is of course not light. It's a heavy burden, and to a large extent should be treated as an additional cost of capital from business angels. When one takes into consideration the additional benefits potentially brought about by this category of investors, it's easy to see that the net balance is or could be massively positive, which can provide a superb return on the emotional investment. In order to get it right, it's very important to bear in mind that there is a need for this due diligence pre-investment phase that will protect both of you, both the family business and the business angel. And this is what this module has aimed to prepare you for. And I hope that at least I have managed to give you some framework to think about when it comes to funding your next growth and expansion project. There is one chat. This is all from me. Thank you very much for your patience. I know it's been quite a long session. Please feel free to ask any question again. Send me an email. Send me your checklists that I could review. Send me any requests that you want answered, and I will be very happy to do so. Thank you for your attention again.
Thank you very much, Andrea.
It's my pleasure.
I don't see any raised hands, but if anyone would like to discuss anything more, we still have a few minutes. I've also shared the evaluation form in the chat, and we would really appreciate it if you go through it. It should only take 2 minutes for you to give us your feedback for this webinar. And I've also copied your email address in the chat for anyone who would like to contact you directly.
Great. I look forward to receiving emails from the participants and hopefully give them some feedback that will be useful for them.
Can I ask you a question?
Yes, of course.
Most of the time, business angels, they invest in startups because
Yes.
they are looking for growth, and they are interested to have a payback in a huge amount. So do you see a business angel who are interested to invest in companies who has a small growth, well, mature? You see what I mean?
Yes. Like I said before, especially family businesses, are an attractive alternative to potentially high growth startups, and of course very high risk startups. It's not all startups that lead to 100 times your initial investment in return. I would say that's a very rare achievement from business angels. But family businesses offer a good alternative to startups, because especially if they're well run, well maintained, have growth potential that the business angel will add value to this growth potential of the family business. And of course, the emotional rewards are very important, to feel part of the family and to feel that you're contributing in the additional potential growth that the family business has. Personally, I have one experience with investing in a family business that it's going very well, because I feel really, truly a member of the family. I was welcomed as one of the family. I'm invited to family dinners and family functions, and I really appreciate the appreciation that is being shown. And of course, I can add value and I can contribute to the growth. I mean, the growth expectation was about 5% year on year, and now we are at 15% under these difficult circumstances, because of what I believe is the value that I managed to add to the business.
I see.
So the answer is yes. It's growing now, and it's a new trend, and you should take advantage of it in case you have expansion financing needs.
Okay, thanks for the answer.
Thank you.
Andrea, we also have a question in the chat from Donya. It was a question she raised in the beginning. Could you describe the best and the worst of your cases?
You're talking about family business. I just had one, and it's a very good one. But in terms of general investments I have made, yes, I had a bad experience that I misjudged. I don't want to say names, of course, that I have misjudged the character of the founder, and it ended up in a huge turmoil. It was one of my first investments, so I want to believe that I am a better judge of characters now after a number of investments that I have made successfully. But yes, the chemistry between the investor and any business is key. So people in this mix are key. There is no substitute to a good relationship between the people involved. However much money the business is making, or however much money the investor is contributing to the business, if there is no chemistry and good match, it will end up in disaster. And that was my case. I don't know if this answers your question, but yeah, this was my worst. And I can really tell you that at least one of my best investments, one of the most enjoyable investments, is the one I have with the family business. I think that's probably all the questions that we have. Like I said, I'd be very happy to answer questions that you have later on, or you want to have a one-to-one email exchange. I'll be very happy to do that. So just please in your emails mention that you've been a participant in this session, so that I know that this is how the questions arise. I receive a lot of emails.
There's a comment from Rania.
Yes. I totally agree with you, Rania, that you know, the emotional component of such a relationship is extremely important, and it is indeed very much played down, and that of course it's understandable, because this is how the financing industry, banks and VCs have been treating their investments. You know, they've been looking at the numbers, and you know, if the numbers were okay, then they were proceeding. But angel investing is completely different. It's mostly emotional. Okay, so
Yeah, I think we've covered all the questions, and I don't see any newer comments.
great. It's been a pleasure, everybody. Thank you all for attending, and I hope that we've managed to add a little bit to at least the way that you think about financing your investment plans, your expansion plans. Sorry.
Thank you, Andrea. And thank you all for participating. Hopefully we'll see a lot of you next week as well. We have 2 more webinars left. The 2 last webinars will take a different format. It will take the format of interview between 2 keynote speakers. So hopefully we'll see you again next week.